Well, good morning. Let me just stop that. Welcome to the MADtrading episode. God knows what. Not that anyone joins and listens anyway. I'm your host, MADtrader, a voice for silent film and a face for radio. Oh. Let me get rid of this bit. I'm not doing that one anymore. And that one. So yeah, as soon as no one's in the chat, let's have a quick look. See. So go over a couple of things. We'll have a quick look through the major forex pairs, and then we'll also have a look see at some other bits and bobs and add a few things as well. So if you are following along on demo only, add the next thing that I'm going to suggest, and that might help you with the trading side of life only on a demo. So first of all, because it's a Sunday, a weekend, when we're looking at the charts on a weekend and we do some analysis, or we try and do some analysis, we need to make sure that we're on the normal charts. Now, yes, we don't want to be looking at the forwards. We don't want to be looking at the forward market, for June or March. We want to be looking at the spot market. That is correct, but it tells us here we're on the weekend pound dollar chart. We don't want that. We want the normal pound dollar chart. If you try and do it on the weekend pound dollar chart, it's not going to work. And also, if you look at the weekend one, my MACD and stochastic look as though they're about to fall over. Just have a quick look at these numbers, 826.9, and then we look at this one here, 826.9. Doesn't look the same, does it? It kind of is. I mean, it if you scroll in, keep that one there. Excuse me, get on there. It kind of is, but because it's live data from Friday, it hasn't got any on the week over the weekend, Saturday, Sunday. The MACD will not have started to fall over yet, whereas on the weekend data, it's ever so slightly down, and we've got this late Friday night, so that's after 11 o'clock at night, and then we've got the Saturday, and then we've got today's data as well. So we don't want to be looking at the weekend data. We only want the normal data, and that might be the same on all the charts we look at, because I've just not bothered changing it back from weekend data to the normal chart. But if you're looking at your charts and you're wondering why it says weekend up there, just click on spots and choose the correct instrument. You want the one that's just the normal week in, week out data, not the weekend data. So let's have a quick mooch. Because tomorrow being Monday, we don't normally trade Monday candles, because they normally only engulf a Sunday candle. However, I've been doing quite a bit of back testing on both MT4 Pro Real Time and also manual back testing here on the Web Trader for IG. And some markets, not all, some markets do or have been giving good returns actually on a Monday candle. However, historically speaking, and I only really work off statistics and historics, statistically and historically speaking, the Monday candle has been a complete bitch. It's not worked out the way you would have thought. So we'll look to see whether the Friday candle engulfed the Thursday candle. That's what we're going to do today on these daily 4-hourly. We're going to add some other bits and bobs in as well at the end, and hopefully if you throw all that together on your charts, it might give you a bit more information and confluence or reasons to take the trade or not take the trade. There's always a good reason not to take a trade. Anyway, So here on the pound dollar, there's no trade. That Friday candle does not engulf the Thursday candle. On top of that, if we look at the weekly, and I don't predict, I don't say, oh, this is what I think is going to happen, in the future, and I'll trade off of that. I don't. But that being said, we have a resistance line up here set at 12,447. Excuse me. It touched it once in December, and then it flew away. That was probably a one-to-one trade you could have had if you'd have taken that one, but I wouldn't suggest that. This is on the weekly, remember. And if we were to touch that red line very slowly, I would have imagined it's going to pull away again, or it's not going to make that red line. It's not going to make that resistance point. It's just going to pull away. And if we look at the daily, we can see that the MACD, it might be about to fall over. We've got two flat histograms on the MACD histogram itself, and price did not really breach these. So we can say it is going to fall over. And also on the stochastic, it's still above the HE line. We don't take trades based on the stochastics, no, but it is a good indicator of where price might be going. So if we do make a lower high, so if this were to cross down below the red, it's definitely a lower high compared to this cross. It still doesn't mean it's going to fall over. It could, the same could happen here. It crossed here and price made a low, but then it came up and made a subsequent high to this resistance line, funnily enough. And this support line is, from here, but it's also historic from quite a while ago. So I would have imagined, if I were to say I'm not going to take a trade, it's because we're too close to this support line. And if I were to go down to the hourly, if and when price were to get into this range, so between the resistance line up there and this line here, let me put a box on, you can see what I mean. So from there to there, so encompassing that wick of that candle, if price were to get anywhere in there, we'll be looking for a reason on the hourly to get short. And if I am short on the hourly, I would then be looking at the 4 hourly or the daily and placing my stop up at that 12,447 point there, with delusions that it will get all the way down to 11,948, but it might not. It might just stop at this 12,157 or 55. Anyway, for our strategy, my strategy, I'm not saying that you should do this. I am not a guru. Don't take anything I say as gospel. Do all your own back testing. Go and research things online. But if you'll just follow me from a demo perspective to see whether I'm talking cack or not. I've only not 5. If I'm talking shit or not, you better figure that out. But if you are following along demo-wise, this is what I would be doing. Daily, no trade. 4 hourly, there is no trade. Remember, I'm only looking for longs above this 200 line. There was a long at 4 o'clock on January the 17th that wasn't up. If I was up, that would have been a very good trade. Let me just show you whilst we're looking at this. That is a MADtrading engulfing candle. I don't mean I own it. I mean that's what I look for. The body of this candle must fully engulf the body of the previous candle. The lower point and the higher point of the wicks must be lower than or higher than the previous candle's high wick and low wick. That's it. Simple. Quite easy to code that as well. Then we get a Fibonacci extension. If we're going long because it's above the 200, we start at the bottom, we click once, we click at the top, and then as we drag it back down again to there and drag it out, it gives us our 0 line, which is our where we put our stop, or where I put my stop. The 100% line is where I would enter the market, and I'm looking for 261 as my full stop take profit. And it most definitely would have taken it here on this candle on Wednesday the 18th, sorry, again, 4 a.m. So it's only a day, and you would have made 1.61%. So if you'd have risked £100 between here and here, you've just made £161. Doesn't sound a lot, but it's the amount of times this happens and the amount of times you keep on adding to the trades that it works out with, and you make more than you lose quite easily if you were to do the back testing and do it on the candles that you can do it on. In real life, I'm not awake at 4 a.m, so let me get rid of that because that was not on the chart. I'm not awake at 4 a.m, well, not anymore anyway. So on the 4 hourlies, I'm only looking for the 8 o'clock candles or the 12 o'clock candles, and if they're engulfing, then yes, I'm going to fly into it. So pound dollar, no trade. UJ, remember it's on the weekend. I need to change that to the normal UJ. Well, whilst on the 4 hourly, let's have a look, see. Where are we? We are below the 200. I'm only looking for sales. There's no 4 hourly candle there. And on the daily, we are below the 200. There's no sale there. Euro USD. Oh, blimey. Change that back to the dailies. To the normal one. Here's the 200. So we're only looking for longs. There's no long opportunity. I was talking, slightly off topic. I was talking to do I call him a friend? I don't know. An acquaintance. And an old friend who I haven't really spoken to about, things you would with your friends, like family, holidays, illness, all that good stuff. I haven't spoken to him for so long that he was not really a friend. But anyway, I was talking to him today, funny enough, on Discord. I've got a couple of Discord handles. And he is, he's quite successful trading wise, and his entire trading strategy is this candle on a weekly or monthly. So let's look at the monthlies, and we're looking for that doji candle here, this indecision spinning top type candle. That's his entire trading ethos. That's all he trades on the monthlies and weeklies. Well, there's not really many on the monthly. There's maybe a couple on the weekly. I mean, there's one, but it's not really. There's one that would have nutted him out, I suppose. But there's not many that I can see that I would have traded personally on there. And the discussion we were having was, and it was about the Euro USD, funny, that on this candle here, if he'd have seen that on the weekly, he would have been in immediately on the close of this candle, which means he would have been short already. So he would have been in just as this candle closed, not set a pending order. He would have been in, started his trade short, and he'd already be short, and his stop would be a couple of points above the wick of this candle. I don't recommend that. It's not a recognized tradable candle for me. However, that being said, when he finished his waffle and went on with his day, I did have a look back, and you can see if you find a bullish one of these above the 200, which is very rare, or a bearish, which is the sell one, the opposite side, below the 200, it can make your decision better. So this one here, for instance, it can make a good decision to go short, but because that's a Friday candle, you don't really know what's going to happen. And the MACD was, well extended, and it's going to be coming back over for a cross, back another cross, and back up again. So it's going up, but it's going to probably make a lower low. That's probably not a good one to take a trade on. However, I believe I took that on a engulfing pin bar, but anyway, never mind. So you can make other candles. What I'm trying to get at is you can make other candles and other things part of your strategy or part of my strategy, and you can make your current strategy a little bit better or slightly different. You can increase the win rate, or you can increase the amount you win. You might decrease the win rate, but win way more. I don't know. And until you do your own back testing and checks and balances and all that good stuff, no one's going to know. But Monday, when Monday does open, not this candle today, because it'll open up at 10 o'clock tonight. On the Monday candle, if the Monday candle engulfs the Friday candle, so Monday night, then that would be a good opportunity for a short. This would also be a second confluence. Excuse me. If that turns into a red histogram, that's also another good confluence. And the fact there are a resistance line up here, that's also another confluence. Did we look at the 4 hourly? Not entirely sure. Yeah, we're only looking for longs. There's no long opportunity there. AUD USD, only looking for longs. There's no long going on there on the 4 hourly, and on the daily there's no trade there. Euro pound, we're only looking for longs. That is not an engulfing candle on the daily. 4 hourly is nothing. Euro yen, excuse me, looking for shorts. Now this is a decent candle that I would have traded if that were on the hourly. So just say this is on the hourly. It's touched the 200 and pulled away quite sharply. And as long as price doesn't breach that 200, there's a good chance it's going to fall over. On the 4 hourly as we are now, we'll have to see what the daily and the weekly are doing. But there's a good opportunity, or good probability, there we go, that this candle will also happen here, but only down to these lows. So on euro yen, I would have imagined that we're going to be looking for a quick short down, maybe to somewhere around here, so between 13,910 and 13,830, 13,820, something like that. So if you're looking for 50, 60 points, that might be a good short, not the full 261 on that. But at the minute, there's no MADtrading engulfing candle, so no trade. And on the daily, we're looking for shorts, and that's definitely a green candle that's breaching or about to breach the 200. And see, there's conflict, isn't there, between the daily and the 4 hourly. So on the daily, that does look quite bullish. That looks like it's on its way up. If you were using this as a trading candle, this pin bar, and you were short here, you'd be in short and in a lot of drawdown. That'd be what's that? 830, 930 is 1, 2. You'd have to have at least 300 odd point stop, which is massive, really, isn't it? So no trade on that. USD CAD, we're only looking for longs. That's a short one on the daily. 4 hourly, we only want. That's what I keep missing, isn't it? Because the daily is long, the daily is above the 200. It doesn't matter whether you think or analysts are telling you, or you're reading that, United States dollar versus the Canadian dollar is on its way down. So the dollar will weaken against the Canadian dollar. It doesn't matter whether someone tells you that. It doesn't matter whether you've read it on Twitter or you've jumped onto some trading gurus post and they're saying, oh no, it's all going to fall over. It might well do. It probably will do, in fact, but that's not the point. The point is the candles for me are telling me I am only going to go long. And if it's only long on the daily, I'm only looking for longs on the 4 hourly. That's something I probably keep on forgetting to mention. So even though there's this candle here at 12 o'clock on Friday was go short, I'm only looking for longs because the daily is above the 200. And just to make a point, if anyone does watch this back or joins and they're listening to this, excuse me again, pick me up on this, get me to the back, fact check it and have a look, see 4 hourly United States dollar CAD, so UCAD 4 hourly. Let's see whether the price actually does make that 261, because give it a few days, I'm going to wonder why I've put this on here. I have absolutely no intention of trading this. I only want to go longs, and I would have imagined, because that's a big move down with the signal line. If you look at the red line is the signal line. The signal line is above the mean, is above the 0 line. Stochastic is about to, probably flip over and start going long. So if we were to breach the 200 on the 4 hourly, then that's when I would start taking dailies. Or if we get a big green candle on Monday, then I'll go long then. No trade at the minute on UCAD. Let me just have a bit of a coughing fit. That's better. Right. USHF, so United States dollar versus the CHF. We are only looking for shorts. There's a 200 up there. So that green candle is a no thank you. On the 4 hourly, remember we're looking for shorts. We're looking for shorts here. That's not a tradable candle. That's a no. And EuroChef. So daily, we're only looking for longs. We're above the 200. If I had to guess, we've been in a mad downtrend for so long, since 21. No, 21. That we are due to have a bit of a faff about and a bounce north. So I'm going to guess flop about for a bit, flop about, and then bang up north. But for now, we're looking for longs. So on the 4 hourly, we're looking longs only, which is good. There's no trade a minute. That isn't a trade. So for anyone that's joining fresh or doesn't understand the MADtrading candle, this green long candle is not a MADtrading engulfing candle, because the body of this candle does not fully engulf, so is bigger than the previous candle body. This low of the body must be equal to or lower than this candle body, and it isn't, so that's not a tradable candle. And currently there is no trade. We won't go through the miners or the Australians, but what we are going to do is we're going to go through GJ. Let me, I think I've got it on there. Let me add it there anyway. Here we go. Right. So let's make this one chart daily, and let me drawings, delete all drawings. We'll go over a few things. I don't need super trend, and I don't need Bollinger Bands, and that should be a 9, not a 20. So on the daily, this is what I'd like you to look at doing. Don't have to do it, but if you are going to do it, I would like you to just look at doing this for all of your charts. And on IG, you can do it on MT4. I'm not a big lover. I've already mentioned this. MT4 for me is only somewhere where I place the trades. So I take the figures from here and I would place the trades in MT4 itself. But on here, for GJ, we have horizontal line. So just grab yourself a horizontal line, actually, and move this away. There we go. And you'll see what I mean in a second. So horizontal line, and I just want to plot or put a line at massive support and also massive areas that are high and low on the chart. So there's one that's high. There's another one down here that was low, and it's not just the wick that I'm after. So if one wick gets hit, that's great, but if 2 or 3 wicks get hit, that's even better. So up here there was lots of things hit that line. Here there's lots of things hit that line. I'm not too bothered about this. Yes, things from the past mainly get tested in the future, yes, but if I'd have put it down here, for instance, we'd still be miles away from it and there'd be nothing for us to look at. So that's the extreme highs and lows on the dailies. Let's go for a couple in the middle. Did that make anything? Yes, it did, because it touched here, and again here, and again here. It breached it here, but it looked at it here. So this is resistance, it couldn't break through. This is support, and this is also support that was once resistance. So resistance, broke through, became support, bounced off. Couldn't break through the resistance at the top there. I think that might actually be all-time highs, but anyway. Then came all the way back down again, broke this line of support, then turned into resistance. Now, we've done all that, which isn't a lot really, is it? Let's drag it back out again and see what happened. Well, yes, it might have faffed about a bit, and if you were just taking trades off of support and resistance, that would have been a loss, but that would have definitely, if you'd have put your stop high enough anyway, been a winner. It went from one to the next. And then it bounced from there, went back up and touched that. It came from that, came back and touched that. It bounced from here and it went back up and it at least touched this resistance line, but then broke it and it became support as well as the 200 moving average. So you tend to find when price is moving, when it's actually broken out of its range, if this here is a range, it will follow the 200 and it will bounce from the 200, which is why I've got the 200 on pretty much all my charts. But it hasn't, as yet, reached all the way up here at the all-time highs. 958. It might not be all-time highs, but it's highs from 2015. Oh, and I've just seen that one as well. So there's a big, massive bounce down, and it just about touched this excuse me, support line, and then bounce back up again. So what we look at is, if I can get that to open up a bit more, if there is a big old support and resistance line around, we would then trade the engulfing candles from that line, for example. And this is just me, explaining how I would probably go about doing some extra bits and bobs. So there's no support line above. There's nothing up here. There's no resistance line for it to hit as yet. There is one here, and I would have said that's a massive no thank you. I'm going to reverse pin bar, reversal pin bar. That's, for me, that's a different trading strategy. I'm not going to go into that. But for me, that's a sign, number one. Nearly touched it, ran away. So the big players don't want to go down this far. The next thing we find is, one, there's a 9200 cross, yes, but that's another, strategy. You're not going to go into that. But then here, on the 12th of October, we get a MADtrading engulfing candle. And if I were to put a fib on that, so from the bottom to the top, back down again. Oh, actually, I don't think it is. I think it might just not be. Oh, it isn't. It isn't. I mean, I probably would have traded it anyway, but that doesn't quite cover the bottom of that wick. Let's say it did, and let's say I'm in it. Let's say I took that trade. Which, thinking about it, if I was drunk as I was last Monday, I probably would have taken it. What day was that? It was a Wednesday. No, it's fine. So anyway, we only want to get to 261, and it gets it on the 17th. So Wednesday the 12th, Thursday, Friday, weekend. We don't take Sunday into it, and then Monday smashes through, takes my 261 out. I've just made 1.61%. In a nutshell, that is it. Now, if it was in the middle of nowhere, for example, I don't know, I don't think there is one. Longs. Nope, there's none. There's none that I can see. GJ is a bit weird. Bet on the 4 hourly. Well, let's do that. Let's go to 4 hourly. 4 early. Remember, on the daily, between, where was it? Here we go. On the daily, we are the 12th of October. Here we go. We're only looking for, remember, on the daily, 12th of October, we're looking for longs. On the 4 hourly, we are at the 12th, funny enough, on the daily, that's the candle we would have started trading with. But we aren't going to do that. We're going to get in at 8 o'clock. Look at that. That's perfect, isn't it? 8 o'clock on Tuesday the 13th. Let me put a extension on that. So smash, smash, bang, have some. And not only does it engulf the previous candle, but it also takes out the previous 4 candles. So that's 4 o'clock the previous afternoon. And it most definitely smashes into the 261 2 candles later. So by 4 o'clock that day, you've just made another 1.61%. Or however much percent risk you've put on between 100% and 0. And you just keep doing that. So on the daily, I've got a long, and I'm in it. On the 4 hourly, I'm in a long, and I've already won it. Let's go for this one. This one's another engulfing candle. I'm just looking now at 12 o'clock. I would have been awake. It's on a Friday. So, is it? Ooh, it might not. No, it is, yeah. It is. That opens, yeah, it's a normal candle. So that would have been a good one on the 4 hourly. DJ 4 hourly is quite good. You just keep on adding. You're only looking for longs. Where's the next one? That isn't one. You're still looking for longs, even on, where's this? The 3rd of November. Let's go back to the daily. November, yep. So 3rd of November, we're still looking for longs. We're above the 200. So on the 4 hourly, we only want longs. So where was the 3rd of November? 3rd of November. 3rd of November, here. So from here, we're still looking for longs. So this is a no-go. This isn't even, we're not going to bother looking at shorts. We only want to go long. And I hope that makes sense. I hope that the support and resistance side of life makes sense from a higher time frame analysis. So only on the daily do that, if you're going to do it. It gives us something to physically see the next time price comes down to here, for instance, when there's another, or once prices come towards this area, the next time there's an engulfing candle, that's another confluence, another reason to get into the trade. If price smashes through this, and a couple of days later you see a big pin bar, and then it's definitely below this now resistance line was support, then yeah, if you go short, you're definitely looking at more confluence. It's going to give you more confidence to take it short. That is the reason behind, for me, support and resistance lines. Let's take it down to the hourly now. So if we, hourly, on the 4 hourly, let's add some more lines in, and we'll only go back maybe here. That's fine. So horizontal line. Oh yeah, I checked back my last video because the audio wasn't really working on Twitter and Discord before, even though I still record it in OBS as I am now. The audio wasn't synced up, excuse me. So hopefully the audio is now synced up on this. If it's not, give me a shout and I'll do nothing about it. I don't really give a shit. Here's another one here. Let's bring it here because, yes, that's resistance there, but it smashes through, becomes support for a little bit and bounces back up again. So there's one. There's one up here. Smash, smash. Oh, yeah, and it pulls it down. So, hourly. So now we've put these resistance lines, the blue ones, on the 4 hourly. Let's look at what you could have been thinking around about this time. So when was that? That was 7th of June. And remember, we take every trade we see, as it were, if we're around. So this hourly one at 2 o'clock would have been a winner, yes. But if we didn't have this line up here, if we don't have this support and resistance line we've just drawn up here, we might still be thinking that we can go long, or that we should go long, even though we're very well extended on the MACD, and the stochastic is about to fall over. There's a high, there's a lower high. See, this is lower than the previous one, but price still continues on up. This is a cross below and a lower high. Price just went, yeah, no thanks. So there's three things there telling me don't go long to go short. So yeah, when you see this, can I draw that? So we have a high up here going lower, but we have a low here going higher. And that's in direct contrast to itself. If they were both pointing long, then let's continue on long. If they were both pointing short, let's continue short. There's no change in the trading direction. But because of this bit here, there's definitely a lower low. Look how far away it is from that line. And funnily enough, the next one is, but we wouldn't have seen that one. That is a, oh, I'll tell you what, I might take a quick scalp to the short side on the hourly. Look at that. There's an engulfing candle right there. That would have definitely made you 261. That's without this support or resistance line that you're drawing in there. If that wasn't there, you could easily say, look, that's a lower low, making lower lows below, sorry, a lower high below the 80 line on stochastic. Not that we take trades based on this. The MACD is on its way down over, and we've just made lots of lower highs on the stochastic, and funnily enough, the MACD was high here, ever so slow, lower high here, ever so lower high here, and then it fell over. It's the blue line, by the way, on MACD that follows the price. The signal line is the lagging line. Anyway, that would have been a good one to take a trade on. Go short, make you 161 or 261%, and away you go. Yes, it makes an attempt to go higher, but look at that, it touches the now resistance line and falls over. So on the hourly, we should only be looking for the same as the 4 hourly. So if the 4 hourly is below the 200, then we're only looking for sells on the hourly. Here, there's a good one. 3 o'clock Wednesday 28th. Sell that, you've made your 121 quite easily, and it doesn't stop there, but it definitely hits this resistance line, support line, and then it breaks it, turns it into resistance. That would have been a small, trade down on another shorter time frame. So what I'm trying to get at is, draw your support and resistance lines, so horizontal, flat horizontal lines on the daily chart, and also do it on the 4 hourly chart. And if it's too far away from any support and resistance, do what you would normally do, or I will do what I normally do based on the higher time frame analysis. If it's close to or just bounced from a support or resistance line in the direction I was going to go anyway, that gives me more confidence to take that trade. But it also tells me that I'm not going to make a lot of it might not reach my 261, it might not get as high as I want it to go if it's nearly at a support or resistance line. I hope that makes sense. If it doesn't, give me a shout and I'll be more happy to go over it again at a later stage. Quick look at indices. Don't even know how long I've been going on for. What's the time on that? 45 minutes? Yeah, no one's listening. So, Wall Street. We don't want Wall Street weekend. We want Wall Street. Remember, change it all. We're only looking for longs on the daily. That is a long. on Wall Street cash. However, let's just do some analysis here. Yep, we've pulled away from the 200, we've come back down and we've touched it. We haven't really bounced away, we've not made another higher high. If this is the high here, we've not made another high. And in fact, I think it's going to be one of these dead cat bounces that you throw a stone onto a pond and it skips a few times and eventually just sinks. So it's, yes, made a breakout of this high over here. It popped up, tried to make another run for it, didn't work, fell down, touched the 200. I think we're going to be going for a fall over. I think Wall Street will be falling down sometime soon. I know I don't make predictions, I shouldn't make predictions, I don't want to make predictions, but that helps me to formulate why I'm not going to go long. If this candle were closed now, it's not, but if this candle were closed now, because we've still got the weekend to go and it's not even open at the minute, I would imagine it's not going to make 261. I would have imagined that might come up to around about the 1-to-1, so 200% on here. It might flitter between 250 and 200, but then fall back over again. So for me, because of what I see here, that's not an entry. When we look at the weekend, the weekly, we're making lower or high, a low, a lower high, a lower low, a lower high, a lower low. Then we have a bit of a breach. We always see that when things have, come to an end. There's always a push, a rally. Oh look, it's bounced off the 200, get all the longs in, loads of people go long. But then it just falls over, it takes all their stops out. And when a stop is taken, in other words, a stop is hit, that is, in essence, another trade in the opposite direction, so another sell trade, because hundreds of thousands of people have put a buy with their stop down here. Price will probably fall over, take out all those stops, and then continue on down. So I would have imagined we'll get down to the 200 again, probably before the end of probably before the end of March, just before tax season in April. The DAX, Germany 40, I'm not a lover of this. There's a couple of people that know why. It used to be, well, not used to be, it was the thing that I traded and I loved it. Let's go back to, I won't go back any further on it. Yeah, let's just take, let's take 2016. So part of my trading portfolio is a strategy called the 9-200. So when the 9 crosses over the 200 in whatever direction, I take that trade. And my stop is at a certain area or a certain distance away. And way back when, it used to be the lowest point of the previous 4 candles. So if I take this one here, that would have been the cross. The cross is between these two, so that's where I would have entered. And I put my stop at the lowest point of the previous 4 candles. So 1, 2, 3, 4. The lowest point would be down here at 9908. 9908. It either would have been hit with spread or didn't get hit, and then it just flies. It goes. And I don't get out until the 9 crosses back below the 200. So where's my measuring tool? So let's go from here to there. 2,436 points at £1 a point. Yes, that's nearly 2.5 grand. But bear in mind, when you have very little money in an account, or what I would have imagined, a small amount of money, you tend to take higher risk. So think of more likely £2 to £3 for these types of trades. And then there's a loss, and then there's another loss, and there's a loss, there's a loss, there's a little loss here, and then there's another big win, and then there's a loss. It's a no trade. It doesn't get into a trade, and then there's a medium win, maybe a couple of 100 points as a loss. And what I'm trying to show you is my trading strategies used to revolve around this DAX. I was all over. It used to be called the Germany 30 back then, way back then, and it was a big winner for me. It would give me so much return that, and this was not through IG. I would do most of my assessment on IG, but then I would go through another couple of brokers, splash it about a bit. But recently, since probably about 2020, yeah, it's been a cow. It's been a little bit of a moo cow. If we go to the hourly, on the normal Germany 30, thank you. It would have been amazing. The thing is, now, because of things have changed in the market quite a lot. The spread has gotten wider, the leverage has gotten shorter, and the amount of money needed. So your what's the word I'm looking for? The amount of bank you need to take that trade has gone substantially higher. It takes a large amount of capital just to put one of these trades on. So a 9,200 cross south on the hourly here, 2, 3, 4, 5. So you're still looking at your stops being above here, but it wouldn't. For me, it's this plus an ATR. That's what I've got, ATR. So this plus an extra 62 would be up here somewhere. The margin requirements for that are so large that you wouldn't necessarily be able to take that trade. But if you had, and if you were still within the trade, if you hadn't taken partial profits, or if you weren't spiked out, whipped out, as happens here, so you're up and then you're down, but because of this whip down, you are out in the negative, which is a lot of money to trade it. If you were to stay in this trade, that would have been a monster trade. But I just couldn't bring myself to keep losing all these little wick outs. So back in, wicked out, if not already on the first one. So, but if I had have stayed in, it would have made that. Back in as a wick out. It's ridiculous. Excuse me. And the 9,200, I will happily go over the 9,200. But for the DAX for the minute, Germany index, it's too rich. If you've only got a couple of thou in your account, as I'm sure one or two people that might listen to this in the future could attest to, if you've only got a couple of £1,000 in your account, putting down even £2 a point on this and having the rest of your account as margin is just not it's not good sense. You need to look at cheaper market. If we look at the monthly side of life, so way back in the beginning of my trading journey, we were looking at big strong uptrends, slow pullbacks, big strong uptrends, and then around about 2020, a massive dip. We know why. And then it pulls away, which is something that we wouldn't have thought. No one thought that. But in this pull away, there's lots of ups and downs and whip outs, certainly on the daily. Anyway, FTSE is in a weird range at the minute, and it has been for some time. This is the high point from 2019. It hasn't breached it as yet. Or has it? Yes, it has. My mistake. Hold on. Are we on the weekend? Yeah, so get back to normal FTSE. If it were to now flop down below the 200, that's a very good indication to fall short. And if the FTSE goes short, then commodities will also go long. So natural gas, which is something that I trade quite a lot. I have my automated sessions on the natural gas. That would probably be a long for me. And Brent crude, where's my Brent crude? There we go. That is also a long for me, thankfully. Over the past a couple of months, it's clawed back some gains for me, and I'm looking for an out basically at 90, 89, 90, 90. Anyway, hope that's going to stick in some people's minds. Let me have a look at the chat side of life. Double it down. Anyone in there? No, they're not. Okay, so who's this? Who's Dazer? Okay. Yeah. No questions on Discord. No questions on the other one. What's it called? Telegram. I can't see any questions on YouTube. No, there's nothing there. I've had no text, so I'm going to call it a night. I will be up and about late, as I normally am. Doing some more analysis for some of the bits and bobs. Looking at gold at the minute. Doing some back testing through my IG Pro Real Time and MT4 on another couple of automated sessions, automated scripts, just to try and get things moving a bit more, as I really don't want to be doing what I normally do for my day job. Anyway, never mind. Listen, I'm going to leave you to it. That's been well over an hour. Hasn't it been over an hour? Dear God, no. 57 minutes. It feels like a couple of days. Got any questions? You know how to get in touch with me. Texts here on YouTube, Discord, the other one, Telegram. Just bring it all in. I'll answer as best I can. If I'm online on Telegram or Discord, just, bung on an hello in there. Just say hello. If you want any questions answered, I'll be, I'll answer them as best I can. But, and this is a big but, what I would like people to do is, if they are following and doing things on their own demo account, back test things yourself. Don't take what I say, or any guru, I'm not a guru, but any person who trades, don't take what they say for granted. Do the test yourself. Look at stuff yourself. If I were to say, take every pin bar, and do a one-to-one trade, don't just do it, back test it. Don't just set that on a demo account and do every pin bar you find on a demo account. Back test it. Because there's things I haven't told you guys. It doesn't always work on every forex pair. My engulfing candle doesn't work on gold, for instance. In fact, let me show you what I mean. So gold, whilst I'm looking at this, on the good spot gold, the engulfing candle on gold is a very different animal for me. And I've been over the nuances of the time frames and things. I don't trade gold on IG. I trade gold through a couple of other brokers. One of them's FXCM. Just trying to find. Where's OBS? There it is. One of them's FXCM, and on the FXCM brokerage, this candle would have most definitely been a engulfing candle short, and if it had been, that would have been a pretty pants trade to enter into. A really weird trade to go into. This would have also been an engulfing candle, But we don't trade the Sunday, we trade the Monday. It is one. I don't know why I didn't get into it on IG. But anyway, I don't trade gold on IG because the candles are not the same as everywhere else that I look, and I don't know why. It's pointless me emailing IG and asking, why are your candles different to FXCM? They don't care. They don't care. But it doesn't work all the time. It doesn't work most of the time, funnily enough, on gold. What works on gold is a mean reversion engulf. So this is, we are below the 200 here on the 21st of July. But if you'd have entered this candle for a long, you would have made 261. Easy. Don't take people's words for it. Definitely don't take my word for it. Do your own back testing. Do your own assessments. Do your own figures. Work out your own statistics. Figure out what you're comfortable with losing or what you're comfortable making, because it's two very different things. Trading needs time. It needs patience. You need money to start. You need a working strategy that you're comfortable using. And as I've explained this a few times in the past, if you can't explain it to your wife, child, uncle, auntie, next door neighbour in under 2 or 3 minutes, and if in such a way that they can understand what you're talking about, then it's too complicated. Definitely too complicated. Anyway, I'm dry. I need some more fizzy stuff to go in my fizzy stuff. I will catch you on the flip side. Give me a shout if you need me. You know where I am. Live your lots. Bye.